And thank you for joining us this morning. Thank you for taking the time to join us. Today, we are going to walk through the 2025 Program Staff Top-Up Funding Guideline and the Planning and Reconciliation template to support this funding, which you should have received through email from us yesterday, Tuesday, November 11th, sorry. This top-up helps to address wage compression for eligible staff in licensed childcare by providing a one-time wage increase based on staff years of service. And we are releasing it to support retention and recognize the dedication of our childcare staff in Peel. The funding is being flowed later this year. And we made a deliberate decision to wait a little bit later so that we could maximize the budget that is available for this 2025 program staff top-up funding and meaningfully recognize staff. We know that December is a busy time for many of you, and so we did share a heads-up memo to help with your planning for this funding back in October, at the end of October. Today, we're going to walk through all of the details of the 2025 program staff top-up, including staff eligibility, top-up rates, and we will be demoing the planning and reconciliation template. So before we dive in, today's session is being recorded and it will be shared afterwards. By staying on the call, you are consenting to this recording. Please keep your mics muted and your cameras off. We are going to address questions in the order that they were received during our Q&A session at the end. And during the Q&A session, if you would like to come off mute to ask your questions, you can raise your virtual hand and someone will call upon you to unmute. If for whatever reason we cannot address your questions on the call today, please reach out to your early years specialist, your EYS. Before we move into the agenda, just a couple of notes for the Q&A session. So we're going to be using the question and answer feature in Teams to manage the questions. For those of you who haven't used it in the past, the function is designed to help us address your questions efficiently while keeping the conversation focused. On this slide, you'll see instructions for how and where to type your questions. It also shows you the upvote button. This will help keep us on track by prioritizing the questions. So please click that upvote button if you have the same question or if you feel that a question that's been posted in the chat is an important one. If you're joining by phone or you cannot access the Q&A feature, please raise your virtual hand during the Q&A portion. So now for our agenda for today, we're going to cover the purpose of the top-up, staff eligibility. We'll talk about top-up rates, calculating payments, surplus, and shortfall, where you can find your allocation in GovGrants, a demo of the planning and reconciliation template, and we'll reserve some time at the end to answer any questions that you may have. So now I'm going to pass it over to Casey, and she is going to start to walk us through the detail of this funding.
Thank you, Nikima. Good morning, everyone. So I will spend some time just taking you through the policy for the top-up funding this year, and then I'll turn it over to Jeffrey, who's going to do a demo of the tool that to help support you in doing the calculations for your staff. So as Nikima mentioned, this year's top-up is a one-time wage increase for eligible program staff and the top-up year is an employee's experience with you through dedicated top-up rates based on years of experience. In this approach is to help address some of those wage compression challenges that we are seeing in the sector that we've heard from you about. So the top-up is separate from other wage grants that we provide to you, and it does not affect any of the workforce grant calculations for those other grants. So just in terms of some key details about the top-up. So the top-up does apply only to those hours worked period of January 1st October 31st of this year. Staff must be employed as of November 1st to receive the top-up. Which staff receives, again, is based on their years of service with your organization. So that is the date that they first became employed with you. The staff must be notified by December 1st of the top-up in writing. So there is a template in the back of the guideline that we sent out in the appendix to help you with this communication. We also be sharing a French version of that communication with you shortly. The top-up must be paid by December 31st of this year. So it's very important to emphasize that the necessary arrangements be made to pay this top-up before that date. No exceptions will be able to be provided if this deadline for payment is not met.
Sorry, Casey, there's in the chat that your voice is a little low, so maybe if you
Oh,
don't mind
sorry.
just
Yeah,
speaking up a little bit more. I don't
Sure.
know if it still is, but I'll keep you posted. Apologies
Yeah.
for the interruption.
yeah, keep me posted. Sorry about that. In terms of staff eligibility, so eligible roles include all program staff and supervisors, as well as supply and summer staff with regular casual status. Their non-program staff are eligible if they spend at least 25% of their time supporting ratios. In that case, they are eligible for those hours that they spend supporting ratios only. Staff must be employed on 21st, as I mentioned, and going to be receiving a T4 for 2025. If you had employees on leave this year, maybe they've left for personal leave or illness, they are eligible for the top-up if they've returned from this leave and are actively working on November 1st. And again, have those eligible hours worked between January 1st and October 31st of this year. You are not required to pay staff who left before November 1st. This is optional, so if you do decide to pay former employees, we ask that you ensure that you pay them based off the hours that they did work between January 1st and October 31st of this year. So in terms of what counts as program hours, so there is a definition in the guideline for program hours, and we wanted to highlight it here. So these are the hours that staff worked and were paid for from January 1st to October 31st for paid time spent in ratio, doing professional learning, planning time, setup, takedown, as well as meetings. We do ask that you do not include any hours paid through vacation, public holidays, sick time, or any hours that where they're working outside of the child care program. We'll just go on to the top-up rates. So these are the rates. Again, they're in the guidelines. The top-up rates for this year are based on years of service. So those years of service are as of November 1st, 2025. So for 0 to 3 years, we have $1.25 an hour. For 4 to 9 years, we have $2.50 an hour. And for 10 plus years, we have $3.75 per hour. So again, the years of service does refer to the total time that the person has worked at your organization, excluding any time away on leaves. It is based on their time with your organization. It's not tied to any previous positions or their work experience elsewhere in the childcare sector. We do ask that you use November 1st to calculate the years of service for staff. So for example, if your staff has been with the organization for 10 years, but only recently became an REC, you would still consider the full 10 years of service in their hourly rate when you're doing that calculation. And the top-up must be added to wages and is not intended to replace any other scheduled wage increases that you were planning. Just take a minute on employee benefits, or employer benefits. So, you must follow your human resources policy to meet any employer mandated benefits associated with the top-up funding. So some of these benefits may vary by staff or by childcare provider. So for specific questions about the benefits, or deductions that apply to your organization and your staff, we recommend that you do contact your payroll professional or your accountant for advice. You must fund all required employer benefits associated with the top-up where they're applicable to you. So this includes CPP, EI, WSIB, the employer health tax or EHT, as well as employee benefits such as vacation pay. And that is only applicable if for every salary enhancement you provide, you have to add that vacation pay for those staff. We do ask that you exclude any public holiday pay or statutory holiday pay from the top-up funding for this year, as it does not apply to this type of payment. When you go to calculate the extra benefit cost for each eligible staff, we do ask that you are using your actual benefit rates applicable to your staff. So do not automatically claim 17.5% benefits if your actual benefits percentage are lower than this amount. So the tool will help you again with doing the math around some of those benefit calculations. We ask that you do not use the funding to create any new benefits, such as an extra week of vacation. And again, just wanted to highlight that vacation pay must be added only if you are required to add vacation pay for every salary enhancement that you provide to staff. So in terms of shortfall and surplus, if you have any surplus top-up funding, so you've gone through, you've applied the hourly rates to your eligible staff, and there's still some funding left over, we do ask that you distribute it equally amongst staff based on their hours worked. And again, the tool will help you do that calculation for you. If you do not have enough money to cover the hourly rates for your eligible staff, we ask that you complete the tool and email it to us by Thursday, November 27th. It is very important that you meet this deadline so that we have enough time to process any additional payments if necessary in December. So once you send us that completed tool demonstrating that you require more funding, we'll review your request in a timely manner and get back to you as soon as possible. And then now we'll move on to Jeffrey's portion, who will take you through some of the financial pieces related to the top-up.
Hey,
Thanks,
thanks, Casey. Thank you. Hi, everyone. So I'm going to provide a walkthrough of the planning and reconciliation template. But before we do that, we'll just go over a few items. Go to the next slide, please. So your allocation, so you're going to receive an allocation in GovGrants. It'll be under a new announcement called 2025 Program Staff Top-Up Funding, and it'll be in the Staff Wages and Benefits Budget category. Okay, next slide, please. Reporting and reconciliation. When it comes time to do the reconciliation, you will upload a copy of the completed template in GovGrants. And in the template, which you'll see in just a moment, you'll report the total program hours worked from January 1st to October 31st, 2025 for each eligible position. You'll report the wages paid for the hours with the top-up funding, as well as the employer mandatory benefits and vacation pay, if applicable, as Casey just explained. So again, please do not include the public holiday pay for January to October 2025. And then lastly, the total funding used. So with that, I'm going to share my screen now and we'll walk through the template together. Okay, and if someone can just let me know that you can see it.
You can see it, Jeffrey.
Yes.
Looks good. Great. Excellent. Thank you. Okay, so this is the program staff top-up funding planning and reconciliation template. It only has 3 tabs. We'll go through each one. This first tab is just instructions and definitions. I won't go through all the instructions since we're going to walk through it together. But what I do want to point out is that if you scroll down, there is also a section on definitions that provides, information about some of the key columns that you have to fill out on the calculator tab. These same definitions we've also pasted into notes in the cells on the calculator tab as a helpful reference. So I'll point those out as well when we get there. The next tab is the provider representation. This is similar to other templates we've done in the past. You'll provide basic information about your agency. There's a few attestations, and then at the bottom, you sign your name, your signature, your title, and the date. It is important that you provide the signature, because if there is no signature, then we'll have to send the template back so that you can provide the signature. Okay, and the last tab is the actual program staff top-up funding calculator. So I know there's a lot to look at on this tab, so before I start punching any numbers, I'll just navigate through the different tables so that we can get oriented. So first of all, you're only going to enter data in the green cells. All the other cells are pre-filled or will populate automatically. The first section up here is just a summary, and you'll start off with entering your allocation. And you'll notice that when I hover over that cell, there's a little note that pops up. It just reminds you where you can find the allocation in GovGrants. And wherever you see a little red triangle in the top right-hand corner, it means there's a note there. And all you have to do is just hover above and you'll see the note. So underneath the allocation is a little planning table. It just shows you the totals of the planning section, which we'll come back to in a second. It'll make more sense once we enter some data. And then underneath we have the actuals and reconciliation, and we'll come back to this in a bit. Section 2 is the detailed staff distribution. And so this is where you'll enter the staffing data for each person. And we'll go through each column in this table, but we'll come back to it in just a moment. Section 3 is the hourly enhancements based on years of service. This is just for reference. There's no calculations or formulas here. It's just showing you the enhancement for the different years of service categories that Casey went through. This last table here, the section 4, is the FAIR input. FAIR stands for Financial Annual Information Return. It's that Excel template that accompanies the financial statements. So for the 2025 version of the FAIR, there's a tab where you'll report on the Region of Peel funding that you've received. And this table is also just a helpful reference. Once we enter data, it'll automatically populate. And then this is the data that you'll enter into the FAIR. So it's just again, a helpful reference. And then lastly, this table down here, it's really only useful if a provider overspends their allocation, which a provider shouldn't have to do. So hopefully there is no instances of overspending, but in case there was, we just use the same ratio of payments made between 0 to 6 and 6 to 12 to prorate the expense for the reporting in the FAIR. Okay, so now we can actually walk through the template, enter some numbers, so we can see how it works. So as I mentioned, if the first step here is just to enter your allocation, which you can get from GovGrants. So for our example, I'm just going to type in 15,000 because I'm only going to enter a couple of staff here. So once I put in my allocation, I'm ready to come down here and then actually start entering my data. One helpful tip to point out is these gray buttons on the side. If I click this minus button, it collapses the top section so I can get a better view of the table. And if I click the plus sign, it expands it again. You can also click the 1 and 2 buttons. So if I click the 1, it collapses. If I click the 2, it expands again. So I'm going to leave it collapsed just so we can see the table more easily. Okay, so the first column to fill out here is the staff initials or employee number. So please don't enter the full name of the staff. So I'm just going to put in AA. And you'll notice as soon as I enter initials or a number, these cells here get highlighted in like a pink orangey color. That just lets you know that there's data that needs to be entered in those cells. The second column is the staff category. You can see my note popping up. So these are the same definitions that were in the first tab. We've pasted into these notes as a helpful reminder. For staff categories, there's 3 options: RECE, non-RECE, and director approved. Someone asked earlier if a staff changed from a non-RECE to an RECE during the year, which position should be used. For simplicity, you can just use the most recent one. So for this example, I'll just pick RECE. The staff start date. So you can see the format there, 4-digit year, followed by the month and the date. So I'll just enter a random date, let's say 2019, January 1st. And then you'll see the years of service automatically gets calculated. So this is the 4 to 9 year category. If the staff person is still there, then you can just leave the staff end date blank. Okay, so then we move on to the staff serving CWELC column. So this is just asking if the staff serves children 0 to 6 or 6 to 12. If they serve 0 to 6, then we're just going to say yes. The next column is the program hours worked between January 1st and October 31st. If a person works full-time, 40 hours a week, by October 31st, they should have worked, just under 1,800 hours. So we've added a validation here just as a little check. So let's say I enter 2,000 hours. If I try to go to the next cell, I'm going to get a warning that just says, this is a higher than the normal range. If the amount is correct, click yes and continue. If not, click cancel and revise. Okay, so if I realize that I entered the wrong number, then I just click cancel and then I can enter another number. So I'll just put 1,700. Okay. For mandatory benefits, same thing. We looked at data from last year and determined that most staff get paid between kind of 10 and 20% for benefits, or the cost, I should say, is between 10 and 20%. So if you enter a percentage that's lower than 10 or higher than 20, or if it's exactly 17.5, because as Casey mentioned earlier, we have seen that sometimes a provider will enter 17.5% because that percentage is used sometime for allocation, but the percentage should be represent the actual percentage for that staff person. So as an example, like if I enter 25 and I try to move on, I'll get a similar warning just notifying me that this is outside the normal range. So if it's correct, I can click yes and continue. If it's not correct, I can just click cancel, and then I can enter a different percentage. I'll just say 18 for this person. Okay, so those are the green columns. So the rest of the calculation is done for you by the template. So I'm just going to scroll a little bit to the right. Okay, so we can see that for this person, because they've been there for 4 to 9 years, they're going to get an hourly enhancement of $2.50. And the 250 multiplied by the 1,700 hours gives us a wage of $42.50 for this person. And then based on that wage and the 18% benefits, the cost is $765 for a total of $5,015. The next section here is the distribution of the surplus. Now, because I've only entered one person into the table, it's distributing 100% of the surplus to that person. So before we keep going, let's enter another person so that the numbers are a little bit more realistic. So I'm going to come back to column B. And I just want to show you one more validation. If I enter AA again and I try to move on, I get a warning just letting me know that this is the same as another cell in this column. So click cancel to differentiate it from that cell. So I'm going to click cancel. if I do have two people that have the same initials, then, maybe I'll call this person AA2. Okay, and then I'll just fill out the rest of the columns. This person's a non-RECE. Let's assume this person, is new. They started, let's say in February, they're still there. So this person has been there for 0 to 3 years. Let's say this person serves the 6 to 12 age group, and we'll say 1,400 hours for this person. And we'll just put in a random 16%. And you can see now that the rest of the table has populated. So in this case, they're getting an enhancement of $1.25 an hour. And then the $1.25 multiplied by the 1,400 hours gives them a wage of $17.50. And then with the 16% benefits, that's $280 for a total of $2,030. And so now you can see the surplus has been distributed across both staff, and it's done proportionally based on the hours worked. And so now we can see that for the first person, on top of the $42.50 that they received over here for the hourly enhancement, they're going to get an additional $3,696 for wages. And then again, based on their benefits percentage, there's a cost of $665 for a total surplus of $4,362. The green section is just adding up the Part 1 hourly enhancement and the Part 2 surplus distribution. So for the first person, their wages are $7,946, which is just the total of the $36.96 for wages here and the $42.50 for wages there. Same thing for benefits. The total cost is $14.30, which is just adding up the $665 here and the $765 from here. Okay, so the total cost for that person for the top up is $9,377, and likewise $5,622 for the second person. So the last step when you're entering data for staff, and this is something that you'll do once you've completed the data for all staff in the planning section, is to enter the actual wages and cost of benefits for each person. Now, theoretically, they should be the same, right? Because the tool does all the calculation for you, and ideally, what the tool produces is what should be paid out. And we put a little note here just saying that the data that you enter and wages and benefits should be the same or very similar to the totals in columns R and S for wages and benefits. Okay, so I'm just going to enter the values here. So that was the wages. This is the benefits. Okay, and then for this person, we've got the 4,847.05 and the 775.53. Okay, so now I've completed the data for these two staff. So now I'm going to go back to the tables at the top of my template. Okay. So now we have a summary. So we can see here we had an allocation of 15,000, and the cost of the hourly enhancements was 7,045, and that number is coming from right here in column M. That's just the total wages and benefits based on the hourly enhancement. And so with that 745, because my allocation is 15,000, that left a surplus of just under 8,000, which was distributed among the two staff. And you can see that over here. Here's the 7,955. That was the total surplus distribution. And it looks like I'm planning to spend my entire $15,000 allocation. Down here in this table, we can see that the actual payment to staff was 15,000, and that's coming from over here. That was the actual total cost of the wages and benefits for all staff. And so the amount that I would report in GovGrants is the 15,000, and in this case, there's a zero recovery to Peel, which is hopefully the case for everyone because we want the surplus to be distributed to all the staff. Okay, so we're almost finished here. So we can see here the fair input table has been populated. So I had an awarded budget of 15,000. I fully spent it, and so there's no recovery. And then there's a breakdown here because I have one person that's serving 0 to 6 and another person serving 6 to 12. The total cost for the one person serving the 0 to 6 was the 9,377, and the 6 to 12 was the 5,622. And again, the total amount spent was 15,000. Okay, so there's one last thing I want to point out. So once the template's complete and you've reviewed all the data, we do want to stress the importance of being as accurate as possible with the program hours worked and the mandatory benefits, because this data does help inform allocations, and so we just encourage you to be as accurate as possible with the program hours worked and the benefits. It also affects the calculation of the top-up payments. So just want to stress the importance of the accuracy there. So once I'm done and I've reviewed and I'm ready to sign off, when I go back to this tab, you'll see that there's a little red note here that says data input is complete. Please sign below. Thank you. So that's just a validation. So for example, if I did something like this where I put in someone's initials and I left the rest blank, on this tab you'll see there's a little warning that just letting you know that it looks like there's something that's not complete. So please enter the missing data in the pink cells. So that's what that's for. So once I've completed everything, you'll see this little sign there letting you know that everything's complete, and then you can sign off, and then this will be uploaded in GovGrants. So that's it for the walkthrough of the template. So Alicia, we can go back to the slide presentation now, and we can just finish off by going through some key dates. So if we can go to the next slide, please. Okay, so this table just shows you some important dates. So on November 20th, you'll be able to see your top-up allocation in GovGrants. Again, the announcement is going to be called 2025 Program Staff Top-Up Funding. On November 27th is the deadline to notify us if your funding is insufficient to pay the hourly rates. Okay, and that's because we just want to make sure that if there is a shortage and we need to provide an additional funding, that we have time to get that payment to you in December. So if you do run into that situation where your funding is insufficient, please complete the tool and email it to earlier system division at peelregion.ca. December 1st is when you'll receive the top-up funding in your bank account. December 1st is also the deadline to inform staff about the top-up payment. And as Casey mentioned, there is a template in Appendix B of the guideline to support you with that. And then December 31st is the hard deadline to pay eligible staff the top-up. So there is no flexibility with that. So we do encourage everyone to plan ahead to make sure that the payment can be made before December 31st. And then in early 2026 is when the top-up reconciliation will be due. So that's the GovGrants reconciliation report that includes the upload of the completed template. We will confirm the exact date in the coming weeks, but it'll be early 2026. The last thing I want to mention is just an effort to reduce the amount of reporting that providers have to do. There will be a workforce update task in GovGrants in Q1 of next year, similar to the one that you would have completed in May or June of this year, where you provided some staffing information. Because we're collecting detailed staffing information through the top-up template, what we're going to do is we're going to pre-populate that GovGrants workforce update task next year so that you don't have to manually re-enter all of the staffing data. All you'll need to do is just review it to see if there's any updates necessary. So that's our plan to help reduce the amount of reporting that providers have to do. So that's it for my portion of the presentation. I'll turn it over to Sonia now for the Q&A. Thank you.